Traders, the PDT rule may finally be dead. For years, the $25,000 minimum has locked out thousands of people from trading stocks, and that may change soon. Let me explain what will happen if that changes.
So FINRA just voted to slash the PDT rule down from $25,000 to $2,000. This is good news because it gives many of us access to the stock market. For those that don't understand the PDT rule, you may be coming from Forex or futures and you've stayed away from stocks because you've heard of a $25,000 minimum. Let me break this down for you so that you can understand what this actually means. So the PDT rule, pattern day trader rule, states that if you take more than 4 trades within 5 business days, you are considered a pattern day trader and you have to keep at least $25,000 in your margin account. Now hold on to the word margin because this is very important. Because there's another type of account that will allow you to that allows you to avoid this. And this is what I started off with when I started trading stocks so that I could help the community that didn't have $25,000 understand how they could trade stocks. So what is considered a trade? If you buy and sell X amount of shares in the same day, that's considered one trade. For example, if you buy and sell 100 shares of Apple in the same day, that's one trade. If you do 100 of Nvidia, that's 2 trades. And that's 2 of your trades gone for the week. So many people avoided stocks altogether because you were capped out at 4 trades on a margin account. Now, the word margin here is important because it's another type of account. There's a cash account. And the cash account allowed you to trade as much as you could, but allowed you to take more than 4 trades under certain conditions. One, you couldn't short, and another is, and you had what is called a T+1 settlement most recently, meaning that the cash you used to purchase the shares would be tied up until the next trading day. So you couldn't use that cash. So let's say you had a 10K account and you bought 100 shares of a stock that costs $100. So you pretty much use $10,000 to purchase 100 shares of whatever given stock you did. And that's your buying power. So once you purchase those stocks and you sell them, you can no longer use that for that day. So if you had 10K, you could buy smaller price stocks and you can grow a 10K account. But for someone trading with 2K or so, this will cause a lot of people an issue. So they just avoided stocks altogether so that they could trade as much as they wanted. So that's the difference between cash and margin. Another benefit for an experienced trader is the leverage. With a margin account, you can get up to 4 times your leverage. So if you have a $25,000 account, you essentially have $100,000 in buying power. So not only do you have instant settlement with a margin account, you also have leverage. So these are 2 different things, 2 different terms that we're going to talk about. Margin allows instant settlement of funds, and leverage gives you a multiple of your buying power. So onshore US brokers will give you 4 times leverage. Offshore typically will give like 6 times the leverage. So since many people didn't have the money to have a margin account, what they did was they would go offshore so that they could trade with a margin account and have instant settlement. And then they also would get access to leverage. So this will burn a lot of people, especially those that were beginners. I think this rule was just pretty bad for those that could have potential to trade stocks very well. So what are the benefits of dropping that down to 2K? One big benefit for me is that beginners aren't forced to trade Forex. Generally, in my opinion, these markets are more efficient. So they are a lot harder to trade, especially Forex. So there's a huge marketing ecosystem around Forex and futures, and many people are just not trading stocks at all. There's a huge marketing ecosystem driving people to trade some of the hardest markets, Forex and futures. Stocks, on the other hand, are a lot less efficient. They're more, the range of moves are wider, and they're a little bit more predictable in a sense because of news, volume, etc. That's one huge benefit. they'd open the gates for a lot of traders to come over to stocks. Another benefit would be the obvious one. A beginner wouldn't have to scrape up 25K. They can start off margin trading, instant settlement with less money. A third benefit is that they may not be forced to trade with evals. The thing is, I'm not against eval trading, but many people are forced to trade with evals because they don't have the 25K. They are they're forced, and many of the the popular ones, the eval companies, they provide forex and futures markets to trade from, which are some of the hardest markets in my opinion. Arguably, I think this is an arguable point. Many of the stock traders make this point, and I didn't believe it at first until I started to look into it and I started to trade stocks, and it's just so much better, in my opinion. And in the eval space, if you are experienced, you can make a lot of money using the eval accounts. Many people that make a lot of money, though, end up being banned, especially those that are breaking records. So there are beginners that are stuck in a loop that are trading with evals, and most of them say, hey, I can get a lot more for my money. So they're forced to trade, and they give me, if you check out this video to the right-hand side, or just read the comments, you see that many people are expressing that they would like to come over to stocks, but because of the PDT rule, they stick with futures and evals. Now, what are some of the downsides? Brokers may allow you to trade with 2K on margin, but they may keep the 25K minimum. That's a fact. Many brokers won't even deal with you unless you are opening up a 30K account. The thing that I like about stockbrokers is that they get paid per commission. They get paid more commissions by you trading more. So what I like about stock trading versus evals is that if you make a lot of money and you continue to make money, they will continue to treat you well. They want to make the money. They want you to continue to trade, because if you trade more and trade bigger and trade longer, they will continue to make commissions off of you. Some brokers may still have the minimum here in order for you to trade with leverage. Okay. But the 2K may give you access to margin, instant settlement. Now, why do I think this happened? I believe this happened because the futures and eval space has grown tremendously. It's probably the profits that these companies have made have probably exceeded billions. Just 2 or 3 years ago, there was one company that did about 300 million alone. Just that one company. There was a company that was investigated, and they stopped operations, but the SEC or the CTC, or one of the government bodies, disclosed that they had made $100 million in revenue, right? So that had made over 150 million, maybe 200 million in revenue. So since then, I know that these companies are sometimes bringing in 10, 15, and $20 million in revenue. There's thousands and thousands of traders that are signing up for these eval accounts. So if traders are going away from the traditional brokers to the eval space, I'm sure some of these brokers have lobbied to drop this down, because if you just read the comments of any stock education video or any video that's arguing that you should trade stocks over futures, the number one response is, but what about the 25K minimum? That's probably why the changes come. Now, we will probably see a lot more liquidity enter into the market. We may have a rally, may have a lot more liquidity, but there's going to be a lot more blown accounts. That's just the nature of this, right? There's only a small amount of people that make money consistently with stocks, so we'll probably see a big boom and we may see a bust. But for you, those that are following high quality mentors, you're getting high quality education, for you, you're probably in a better place now that if that is to pass. Now it has to still, the SEC still has to sign off. And if that happens, we could see, the implementation within, the next year or so. So if you're serious about trading stocks, go ahead and look at my 0 to 100K roadmap. It's a 9-step roadmap where I share how I've taken students from 0 to crossing 100K by building out, having the right mindset, building out a strong playbook, and becoming consistent, developing all the skills that they need to become consistent. I'll continue to drop updates about the PDT rule and the changes. If you want to trade with us live every day, hit that notification button. Click the link in the description to get the full PDF, or watch the video, or watch a short version in the right-hand corner.